Namaskar, Vanakkam Dua. A very good afternoon, Bay Area. This is Sia on the show Real Estate Roundup, where we talk all about your goals, your dreams pertaining to all things real estate with Nagaraj Anaya, the founder of nagarajhomes.com and your trusted Bay Area realtor. Nagaraj Anaya, one name who has mentored thousands on how to build wealth using real estate, has helped many manifest their dream of home ownership and has guided real estate investors build large portfolios. If achieving financial freedom through real estate is one of your goals, or you're thinking about an investment property, maybe you are in the process of buying a home, or just debating when is the right time to put your house on the market. Let's navigate this journey together. Nagaraj Anaya is here in Bolly Studios with us. What better time than this to join the conversation? Any predicament regarding buying or selling real estate, just dial 1-877-265-5992. That's 1-877-265-5992. Call us in the studio at 1-877-BOLLY92 or 1-877-265-5992. So just think of it as an extension to your living room conversation. Only this time, a seasoned expert is available right here, right now to give you an informed opinion. Studio lines are very open. 1-877-265-5992. With that, let me welcome Nagaraj. Hey, Nagaraj, happy Sunday.
Hello, Sia. Hello, Bay Area listeners. Happy Sunday. Sia, we have one caller. Let's take up this call, Sia. Welcome to the show. Your name, please?
Mayank?
Yeah, hi, Mayank. What's your question? Please go ahead. Nagaraj Annaya here.
Hi, how are you, Mr. Nagar? Thank you very much for taking my call.
Sure.
I wanted to know more about the general real estate environment in the Bay Area. I live in the Washington, D.C. area.
Nice.
And I'm looking to move in this summer to the Bay Area.
Great.
And my employment situation is going to be centered around the Palo Alto, Menlo Park area, and I'm looking for a place with good schools. And with the current macroeconomic situation, with everything going on, I am, although mortgages are dropping some, but I'm confused about should I wait, stay on the fence, rent for some time, and then buy. And basically, my situation is that on the buy side, I still have a competitive environment in the Bay Area as the housing market is still competitive. While in the DC area, there is pressure on the sell side. I do have to sell a place, and there's pressure on the sell side because the market is dropping somewhat here because of the entire federal government situation. So I don't know if you have any pearls of wisdom that you can share with me on how I should navigate both the buy side and the sell side.
Great, Ashish. See, first is to sell side, right? What is the rates you logged in your Washington, D.C. area?
3%.
Yeah. See, 3%, do the math, basically if you're going into a lose, again, depends on how much you purchased and how much you're going to after kind of when you're selling, if market is little bit slowing down also in DC area, what is the gain are you going to make? Are you going to make some gain or are you going into underwaters, right? That math, just do the math. Based on that, you can decide it. If you're not going underwater and if you're getting back your deposits, down payments, and if you're happy with it, but if you're looking for an appreciations, again, that's the math you need to be doing and how much you are happy for it. Okay. Once you decide on that, then you can sell or you can rent it also, depending on your rental situations also there. How is the rental going in around? Looking around Redfin, Zillows, any other websites, and try to understand what is the more rental you get it in that area. If the rental matches to your current mortgage payments, property taxes, yeah, it makes sense for you because a 3% interest rate is what it finally comes down to the how much you're going to make and how much you want to get out. Would you like to wait for some more time, or you want to wait and see will you go and make a profit, or you want to happy to get back, take back your deposit and more, right? That's all depends on your situations. And coming down to buying here, if have you moved to Bay Area anytime, or this is the first time you're moving to Bay Area?
It'll be the first time. I mean, I visited, I have family down there, but I know that I'm going to have to be settled for at least half the square footage because I have a my dollar goes a long way here. I'm going to have to settle for a smaller place. I know somewhat. What I'm trying to also understand is what are the trends of housing trends that you're seeing in the next couple of years in the Bay Area with I mean, the economy is impacted everywhere. So I also know that Bay Area companies are under pressure to not, they don't have a lot of growth right now that they are observing. So everyone's in a consolidation phase. So do you think there is hope that the housing market may stabilize and may become maybe less competitive than it has been in the last couple of years?
See, that's a hard question to answer because see, all the prices have gone up so much higher. Even if it is stabilizes already also, right? Or even it goes a 5% down also, prices are already too high. Okay, so in that perspective, maybe the going interest rate going down might help us out. Right now, the interest rates are around 6% to a 5.5% for the ARM rates. Hopefully, in some time, if the rates start going down, right? So then we might see something like basically sellers also panicking, buyers is like not going and giving that higher prices. Then that situation comes in. But right now, there are you think the sellers are getting panicked, but not actually. That is not happening because sellers are like most of them, 75% of them are locked to a 4% or less than 4% interest rates, and they don't want to sell if they are not getting a good rate, good home prices, right? That is the circumstances. Now we need to see who will give up first. Is the seller is going to give up first or the buyer? One problem is like any houses you go in, any single family, I'm talking about it, good neighborhoods, any single family homes, the number of home buyers coming in is not reducing it because one person get the offer also accepted, another 15 buyers are there in the queue to buy it in the good neighborhoods. Okay, that does not apply same to a condo market. Single family homes going to be a challenging. Again, depends where you want to buy. If, for example, your price range you want to buy on 1.5, 1.2 million, right now it might be a mountain house, might be a good price range because there you have seen a lot of price cut right now because offices started opening up. South Bay becoming very hot right now. So depending on where you're going to purchase, are you okay to commute? All the factors plays in, Ashish. For your circumstance, I would suggest don't buy the house immediately. Come down here, stay for 3 to 6 months, watch out which areas works out for you. Based on that, go for it. Buying it, staying in Washington DC, it will not work out in the Bay Area, especially because you don't know what is actually where do you like, right? Unless you're going to do all cash, that all cash it might work out. But in that cases, okay, that's a different circumstances we are discussing. In your case, I would suggest come down, stay for 3 6 months, explore the neighborhoods where you want to go, basically spend or buy a house. Then you can decide on it. That would I would suggest for you. Do you have any?
Thank you. I appreciate it.
Thank you, Ashish, and best of luck for your house buying journey. Okay. And you can go, give me a call once you reach there also, and I'm always happy to help you out. Listeners, myself, Realtor Nagarajan Nayyar, and I'm with Sia today. We are discussing a lot about the Bay Area real estate. And if you have any questions, you can give us a call. Our studio line numbers are 877 Bali 92. I welcome Sia. Welcome to the show.
Yes. So call us in the studio 1877 Bolly 92. That is 1877 265 5992. So any question, anything that's on your mind, you just have to give us a call here 1877 265 5992. So, Nagaraj, as you were just explaining, and we just like even with Ashish, we had like little kind of concern there. Will the bear market in tech stocks and a very huge drop in S&P affect housing affordability in the Bay Area? What do you think? Because one key reason why people are able to pay for these multi-million-dollar homes in the Bay Area is the money from the stocks. So, do you think sellers should not be waiting any longer to sell? How does it impact the buyer?
And before touching on that, Sia, like let me talk about a few stuff, right? I would like to talk about the governments who were ruling when the recessions happened. Panic of 1907. President was a Roosevelt. He's from the Republican. Banking panic led by runs on banks and trust companies, right? That led to the creation of Federal Reserve in 1913. So that was one of the panic of 1907. And the second is a Great Depression, 1929 to 1939. That time the president was over. Like that time was more of a Wall Street crash, 1929 to 1939. It took almost 10 years. And again, Roosevelt took up in 1933 that basically implemented New Deal programs. One more recession not to forget was oil crisis and the stagflation, which was around 1973. Okay, so that was during a Republican. And one more is like basically again the Gerald Ford took over and faced inflation, a lot of unemployment issues. And early 1980s recession, right? Like it was like again that was the only one president I'm seeing from a Democrat, and he caused the inflation and economic instability that started in this term. Again, 1987, Ronald Reagan was a president. He was also again from a Republican. The stock market crash, which was like 22.6% in one day, 22.6% in one day. And dot-com bubble burst, who doesn't know, right? Bill Clinton was a Democrat, like bubble, like built up during this term. And normally during a George W. Bush was a Republican. He was a president who inherited a crash and recession started in 2001.
So they create this recession and crash, and then the Democrats come and fix it. It's something like that.
I think we don't want to talk about the who fixed and other stuff, but if you look around the crashes, right? Again, we are 2008 also, right? Like again, George W. Bush, global financial crisis, housing bubble burst, and every crash we have learned the lessons. We came back and fixed something.
Mm-hmm.
Right, that's what we are observing. And there is for every crash there are some reasons and lead to it, and we fix for that. Correct. And again, COVID-19 crash also, right? Donald Trump was a Republican and market lost almost 30% in 1 month due to global shutdowns. Correct.
Mm-hmm.
But every time there is a loss, it's coming back. Correct. Going back to the real estate, let's talk about the real estate, what happened during a 2000 financial crisis. Prices dropped almost 32% in some parts of the Bay Area. Okay, 2000 odd dot-com crash, home prices in San Jose fell down almost 7.5% to 8%, and San Francisco around 0.8%. And it almost took us 28 months to recover during a 2000 dot-com crash.
Correct.
But right now, if you go and check around the prices of 2000 to 2025, the real estate prices are the same. No, right? Are we getting
not at all.
homes around less than 1 million?
Mm-hmm.
No. Anytime the crash happens, we are seeing around 20%. Maybe again depends on which areas. That's what I keep telling you. Which area you buy the house matters for you. Correct. Especially big tech companies like Meta, Amazon, Google are down with a 30% from the recent highs, especially last week is almost 30%. Today I was talking to one of the client, he was telling me in his portfolio almost 500K reduced from last 1 week. Does it mean like for him is like he's less on the cash? No, it's only the stock. Stock is always a virtual money. If you're not going to sell it immediately, again, depends on which company you're investing in. There's a possibility of it come back or it takes a lot of time to recover. It's again depends on the scenarios to scenarios.
Correct. Right.
And especially in a Bay Area, what we are noticing is like compensation, how it works is base pay is a one component. Next is the RSUs component. The RSUs component usually are split from for 4 years, right? Like it normally splits for 4 years. That depends on the companies to companies. They allocate the RSUs and they divide it for next 4 years. That is where we are seeing it. Like especially a lot of income in the Bay Area is coming down to most of the tech workers make around 40 to 60% of total compensation. Okay.
Correct.
As the RSU income drops, buyers are reassessing affordability or backing out. That's what we notice in. But yesterday, let me give you a couple of examples what's happening in the Bay Area real estate, right? Yesterday, we put an offer in a Sunnyvale house. This was listed for 2.995 million. Okay, It was first initially listed for 3.2, but the seller reduced it for a 250K, and we put an offer for 2.95, 50,000 lesser than the list price, current list price. Seller calls back and says, or the seller agent tells me, Nagaraj, we are looking for a 3.2 million. We don't want to sell anything lesser than 3.2 million. Seller says, I don't want to sell. So seller is not budging out in these cases. Everybody knows it is only a short-term recovery. Basically, again, let's see how the stock market goes next week. It might be volatile for a couple of more weeks, depending on how the things pans out, right? Right now, Trump is saying, China is saying something like on the tariff wars. But what is happening, what I'm noticing in these things, especially the cost of the goods, construction materials, and consumer goods may go up already. Let me give you one more example. We ordered something around $2,500 from China. It was just a $2,500 to get it from China, this aluminum material. But to get that material out from a San Francisco port, it's costing me $2,500 more, right? It's almost 100% up right now to get it out of from the San Francisco port.
So
So you
that's
can,
what. Mhm.
that's the construction materials right now going up so much. Okay, since the construction materials are going up due to tariffs and material shortages, right? It's automatically is going to delay in a new builds, tight inventory, more pressure on existing home prices.
Yes. So because obviously there's tariff on all these imported goods, so housing materials
And
will
America
be
can't go,
increasing.
yeah, America can't go and start building all the construction materials immediately.
So what do you think? Does it imply that buyers should not wait any longer to buy,
It
or
depends on the
it's still a
cases.
good time to buy?
It depends on the cases again. If you're one of the persons like who's got impacted, right, like where the stock markets are slowing down, or like, right, in that cases what you should be, that's what I told also in the one of the last recent interviews, like say that if you're planning to buy a house anytime, keep aside a 20% or 10% down separately, so that that is not dependent on your stock markets. Okay,
Mhm.
so keeping that aside will help us them like not to decide the prices based on the how the stock market fluctuates, but actually this is a good time for the home buyers to jump in and get the houses, because some of the times you might get it for a good bargain.
Right, right.
You always wait for the stock markets to recover, home prices also will recover and home prices also will go up. In these cases, wherever the home sell, I told you in Sunnyvale example, 3.2 million. In the normal scenarios, this home seller would have asked for a 3.5 million.
So maybe rather than waiting on the sideline, at least explore the market.
Explore,
If
and I'm
you are
not telling.
deciding to buy, then at least explore, and then maybe there may be some cases where like a good bargain comes your
Yeah,
way.
yeah. And it is not necessarily, we are not trying to sell and telling them to buy immediately, right? Because instead of taking for yourself a break for a 6 months, again you come back. So you don't know the market, how it goes in. In this scenarios, keep exploring if the house satisfies your needs,
Mm-hmm.
your requirements. Because if you're doing a home shopping or like home looking, or you're looking for homes, you might have decided what is your purchase price and what is your requirements and which areas to buy.
Right, right.
Start exploring in that area, see if you can get some any discounted home prices. There are two things, right? Like one is like you basically take a back foot, stay back, come back again, start from zero again from 6 months, 1 year. It comes down to what you want to do. Like it's like basically for you keep renting out, or at some point of time you want to diversify. Okay.
So,
So
as a follow up to that, Nagaraj, the prime factor where the Bay Area homes differ in comparison to many other places across US is the fact that home appreciation values are high. That can be said for pretty much like the entire Bay Area, even the Central Valley, how it appreciated in the past few years. So, but now with the current economic constraints and political scenario, do you still foresee the same appreciation of home prices in the coming years?
yeah, see, that's a great question, right? Like as I said, from last year to this year, there are examples. It is home prices have gone up by 5 to 10%. Okay, it is not. It's the same as a semiconductor business. Like it is not like you can't keep on increasing. The semiconductor can't keep on increasing. The same thing, the real estate also. It can't keep on. The home prices can't on keep on increasing. Okay, at some point it needs to be a stagnant and it needs to go flat, wait for some time, recover again, it needs to be going back. If you looked around last 50 years, 70 years history, there's a stagnant situations. This kind of a situations are the time where the especially smart investors, or the one who wants to build on their equity, one who wants to build on the wealth, they are the persons who jumps on and buy the real estate or something on the investment. I'm talking not talking about the real estate alone,
Mhm.
any other investments also.
Right, right.
Warren Buffett was basically holding on to a lot of his $1 billion right now. He was expecting something to slow down. He was expecting to basically hold on to his cash. Correct? This is the right time he thinks maybe jumps on to buy the properties or like buy on his investments. So that is where the smartness for the investors comes in. I know the first time when you're buying a house, it based on your requirements you go and buy. But investments when you're doing it, you need to look for investment, especially investment properties when you're doing it. So you need to go buy when it's especially when it is slowing down. Will the property keep on appreciating? Nobody guarantees you. It is always there is a recession comes in or anytime the market slows down. It that time when you're not selling it, it satisfies your it's basically it keeps your monthly payments going on, then you're good.
But sorry, I'm a little confused here because you said that it may be stagnant or the appreciation may not be to that ratio. In that case, do you think if I'm buying a home today, it's still a good buy, and then maybe I have to wait out a certain period where I see appreciation in my own home?
See, why do you want to look at the appreciation? Tell me, are you going to sell the house immediately? You're not going to sell the house immediately. How does it matter for you? Is it why do we need to compare it as a stock market?
Hmm.
Correct. That is the most mistakes we make always. Why do we need to start looking our home prices like a stock market? Unless you have some future investments going on. For example, you need to pull the HELOC. You need to get a home equity line of credit. Okay. So home equity line of credit helps you out to go buy one more property or go fix up your property. So in that cases, you need to be looking for a home prices have gone up or not. Why do we need to keep looking the home prices always? Going because it's anyhow you know that you're going to stay there for a longer time. That is the mistake what we make always, especially houses, comparing the houses to the stock market. Why should be? Because now it is most of the correlation is like stock market and house prices are correlated right now. Anytime the stock market is going up, your home prices also keeps going up. How does the home prices goes up? Near comparable sales happening in that 0.5 mile radius. One of the myth what I have observed is lot of Redfin and Zillow numbers right now are doing a miscalculation. They do what based on the per square footage. They basically that which is completely wrong because they don't even consider the house has been appreciated or not without being house because they're just calculating the math based on the number square footage. For example, $1,000 per square footage. They do a math into that thousand into 1,000. They come back with $1 million, right?
Hmm.
That is not the way it works out because it needs to doesn't look out as the house has been upgraded, not upgraded, right? So does it have the foundation issues? No. It does basically just take the higher prices what has been sold and just averages out. So normally the comparables how it happens is like last 0.5 mile in the 0.5 mile radius, what house has been sold and is the house has been upgraded or not. Based on that, it comes down to it.
So, in the current market, if somebody is trying to sell, like if they, how should they strategize the sale? You have any words for people who've been wanting to put their house on the market in the
Mhm.
coming months?
Yeah, see, especially if the sellers are there, right, they need to be realistic right now. Okay, some of the home prices are being slowing down. Not all the home prices, but some of the home prices. So, as a seller, what they need to do a strategy is they need to go talk to the realtor, understand what has been the comparables in the last 6 months, last 3 months. What is the minimum price the house has been sold out, and is that house has been upgraded, and what was the how many offers it came in. So getting the understanding the number of offers the previous houses which has been sold also, right, that also is a great indication for that because that many home buyers are there. Correct. So understand all this, especially number of offers received, how many like how much more it was sold for the list price, and understanding per square footage also matters. How the house was upgraded, without the house upgraded, how much it went. If the house was upgraded, how much more it can sell. So all these things needs to be strategized. It is not, especially being right now closer to a summer, it's a right time to sell your property if you're planning to sell it, right? So that is why strategy matters most when you're selling the house. Talking to experts like me, right, I can guide them based on their location, based on the house has been upgraded or not, what is the right price they can sell it. And always don't list your house too high. Too high, too low matters. Listing a right price always matters. So that is why talking to expert matters. Sia, we are running out of a time, but we'll talk more on the coming episodes on all this. If I have one more update, Sia, like I have a two-bed, all the listeners, like I have a two-bed, two-bath condo in a Milipitas. If somebody is interested on a 955, it's a listed on 959K. It's a great location, closer to a bar, and if it's closer to all the offices around. I'll be there in open house from 1:30 to 4 p.m. They can come and meet me also. It's a 1979 Nightshade Road, unit number 30. 1979 Nightshade Road, unit number 30. It's a great location for the first-time investors, and if somebody was looking for a rental property options also, right? It's a great property out there. Do come and meet me during open house today at 1:30 to 4 p.m. And thank
So
you so much
today,
for listening.
1:30 to 4.
Yeah.
Yes. And they get to meet you also.
Yes. Thank you so much for listeners. And if you want to connect with me, go to nagrajhomes.com and click on a WhatsApp icon. That's how you can connect with me.
So one more time, nagarajhomes.com. The number to call him is 1-858-880-4577. With that, thank you so much for tuning in. और बे एरिया की इन्हीं गलियारों में फिर निकलेंगे एक बार घर की तलाश में. Same time next week. Until
Thank you so
then,
much.
thank you to Nagaraj, and this is